Yeah, good morning. This is Jim Harvey, president of Opus 111 Group, and this is your Money Week. I want to talk a little bit about the Fed and consumer confidence this week with an update on the week that just was. Although August is off a month for Federal Open Market Committee members, Federal Reserve Chairman Jerome Powell still had an opportunity to provide forward guidance and steering the market through much anticipated appearance in Jackson Hole, Wyoming last week. He took a strongly hawkish tone. He made it clear that more rate hikes are coming and fighting inflation is his top priority, despite the pain that many households will likely experience as a result. This comes as the Chicago Fed's National Finance Condition Index pointed to loosening economic conditions in most of July and August, which is a trend the Fed is eager to put in reverse, wanting to tighten things, especially after already hiking rates by a historic 75 basis points at the past two Federal Open Market Committee meetings. From here, markets will look toward the Fed September meeting for the next rate hike and additional economic guidance as we near the final quarter of 2022. U.S. Treasury yields were up across the curve last week. The 2-year, 5-year, 10-year, and 30-year rose 9 basis points to 3.38%, 8 basis points to 3.19, 11 basis points to 3.07, and 8 basis points to 3.28, respectively. Equity markets sold off heavily last week as the Fed took center stage at the Jackson Hole retreat. Most of the sell-off came on Friday following Powell's comments regarding rate hikes to push inflation towards the Fed's long-term target of 2% over the economic cycle. While this move was expected, the chairman's live press conference surprised many investors. As a result, several sectors, including technology, consumer discretionary, and industrials, reversed course despite performing well during the recent market rally. Sectors that have held up better were those that benefit from sustained inflation, such as energy, materials, and real estate. Future employment reports and inflation reports will be closely monitored as the Fed continues to drive back down to hit its target rate of 2%. On Friday, the personal income and personal spending reports for July were released. Personal income increased 0.2% against calls for a 0.6% increase, so less. This was the 10th consecutive month with income growth, and although the increase in July came in below expectations, this was still a positive result. Spending also failed to meet expectations, with the report showing a 0.1% increase against call for a 0.5% rise. This follows a 1% rise in spending in June and marks 7 consecutive months with increased spending. Overall, these reports showed that consumers were still willing and able to spend during the month, which is a good sign for overall economic growth. On Tuesday of this week, Conference Board Consumer Confidence Index for August was released following 3 consecutive months of monthly decline. The index now stands at 103.2, up from 95.3 in July. Consumer confidence increased in August after falling for 3 straight months, said Lynn Franco, Senior Director of Economic Indicators at the Conference Board. The Present Situation Index recorded a gain for the first time since March. The Expectations Index likewise improved from July's 9-year low, but remains below a reading of 80, suggesting recession risks continue. Concerns about inflation continue their retreat, but remain elevated. So overall, I think the message is mixed. Obviously, the markets are not loving the increasingly hawkish Fed responses to inflation, but everybody kind of understands that it's important to get it under control. So I think you're going to get this mixed set of expectations, some good news economics, some bad news economically, without a clear-cut situation unfolding. As for a recession, we're already in one, and in our opinion, it's bound to be mild, at least for now, because unemployment is low and consumer confidence is pretty good, and spending continues to increase. So that's all I've got for this week, but if you want to learn more, go to our webpage, which is www.opus111group.com, particularly the Learn page, where you will find video and audio podcasts, blogs, and other information to help you sleep better at night as an investor. All the best. Cheers.